Have you ever had a friend that bought Dogecoin, changed this into his profile picture, and then changed his Instagram bio into investor and entrepreneur, right? So if you have, you're not alone. So during the meme mania of 2020 and also 2021, and some would argue that it's still ongoing now due to AMC stock and GME stock and all that, right? A lot of people have been confusing investing with speculation, right? So I'm just going to roll the intro and then we'll get more into it. What's going on, guys? Hope you're having an absolutely fantastic day. So today we're going to be talking about the differences between investing and speculation, right? So we're going to go straight into it and really talk about the dangers of confusing the two, right? So the first danger of confusing the two is obviously you buy into something like Dogecoin thinking it's an investment when it's actually a speculation, right? So how do we differentiate? I'll get into that later, but I want to talk about the danger, right? And to understand like why am I even talking about this topic, right? So if you buy into Dogecoin thinking it's an investment, right, then you have a very skewed perspective of investments when the prices of these assets go down, right? So they are speculations, but they are also assets, right? So the issue with these kind of speculative assets is you cannot determine the actual value, right? And when people confuse investing and speculation, they cannot determine the value for this, and then they think the rest of it, like the rest of investing, is all scams, right? So that is a very bad mentality to have, right? Because we know with inflation at 8.5%, headline inflation at 8.5%, that if you don't invest, you'll never get ahead, right? If you're a saver, basically they are punishing you for saving money, right? If you work hard and you save your money into the bank, you are getting punished for basically the crimes of your politicians wanting to overspend, right? So let's just get into the definition of the people that pioneered investing, right? So basically they created the term for it, right? So this is basically Benjamin Graham's book, The Intelligent Investor. If you want to read it, if you want to be a serious investor, you should really read it, right? So but I think it's a bit repetitive, and the few important principles is stocks are not basically pieces of papers, and also margin of safety. I think those are the two most important ones, right? So those are off the top of my head. I can't remember a lot of others right now, but I also don't want to make the video too long, right? I think maybe this definition is not exactly accurate, but they always protect themselves from losses. Remember that, because if you have fundamentals behind it, if I tell you that this stock or this company will make you $10 a year, then you can start to think, right, how much is this company worth, depending on interest rates and all those other complicated things which are for another video, right? But basically you can start to think. But if I tell you that now I offer you, let's say, $1 for your company that makes $10 a year, obviously you can realize that is a very, very bad sale if you choose to sell it, right? But with speculations, you never really know. So whatever price that people offer are just the price that is there for you to either buy or sell, right? So what is the definition of investing, right? So according to Graham and Dodd, value investing is deriving the intrinsic value of a common stock independent of its market price, right? So I would like to maybe edit this a bit. So it doesn't just have to be a stock, right? It can be an investment property. It can be a private company that you want to buy a stake in, right? So you can do that, but subject to laws and all that, and whether you know the owners and all that. So by using companies' factors such as its assets, earnings, and dividend payouts, the intrinsic value of a stock can be found and compared to its market value, right? So obviously you have a price for an asset and you have a value for an asset, right? So don't confuse the two when it comes to investing. So the price is what you pay and the value is what you get. So if I told you again, this asset will pay you $10 a year. So how much is the asset worth? So if interest rates are, let's say, 0%, then obviously the asset will be worth much more. But if interest rates were, let's say, 15%, then the asset will be worth much less. So the exact dollar value, I can't calculate it right now because I don't have it on hand, right? So I just came up with this example impromptu, right? So what is the definition of speculation? Speculation involves trading a financial instrument involving high risk. So it doesn't always have to be high risk, right? There is intelligent speculation as well. So in expectations of significant returns, the motive is to take maximum advantage from fluctuations in the market, right? So bear in mind this sentence, right? maximum advantage from fluctuations in the market, right? Not fluctuations in value. So value basically is what the company produces. Let's say if you buy a cow, the value that you get out of it is probably milk, the cheese, and the cheese that you can make with the milk, and the meat that you get from the cow, right? So that is a value. But what is a market price of the cow? It can fluctuate greatly. If you send the cow to maybe a starving country like Argentina, or maybe, okay, I'm not saying that Argentina is a starving country, but they have their economic issues right now, right? So if you send it to Argentina, if you send it to Africa, they have different prices, right? And if you send it to maybe a richer country like Switzerland or even the US or the UK, so obviously there are different market prices for all these goods and services and these products, right? So description: speculators are prevalent in the markets where price movement of securities are highly frequent and volatile, right? So again, bear in mind, the focus is on price movements, right? Not on the value of something. So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel. And also watch till the end, right? Because obviously you don't want to miss any important information. So I've created a little presentation, basically differentiating and letting you guys know how investing and also speculation, like the common traits of an investment and also a common traits of a speculation, right? So in investing, you have a certain understanding of the intrinsic value of that asset, right? So nothing more to say about that. I think I've already went through quite a lot about that. So number two thing, obviously this is not a comprehensive list, right? It's some things that you can look out for, but it's not everything, right? So number two is value is expected to accrue from cash flows, right? So the value itself is from that $10. So from that $10 of the same example again, right? So that $10 that the asset produces, how much are you willing to pay for that $10? So the value is expected from that $10 rather than expectations of the price that people are willing to pay for that $10 going up. So decreases risk due to fundamentals being present. So obviously if you have a factory worth 50 million and the market price of the security is trading for, let's say, 55 million, so the max you can lose is probably only 5 million, right? Because you can always sell the factory and get back 50 million. So that is decreasing risk, right? So sometimes it happens where also the company that owns the factory is selling for, let's say, a 30 million, but the factory itself is worth 50 million, right? That is what we call a discrepancy in the market, right? And that is what value investors seek to take advantage of, right? They want to buy basically $1 for 50 cents. And if I want to make that example more accurate, is basically the company will be trading at 25 million, the factory is at 50 million, and basically value investors would want to buy the company at that moment, right? Because they can always liquidate the whole company and sell the factory for 50 million and make 25 million in profits. So focus on value, right? So value, as I described, is what the company or what the asset can give you, right? So what is a speculation? So speculation is anything that has leverage, right? And you can see that a lot of hedge funds and a lot of maybe these capital companies or even whatever funds they are, right? So they will employ leverage. And why do I say this makes it so that it's a speculation, right? Because if you have leverage, your time horizon is shortened, right? This is why Warren Buffett has always said, right? You find in the financial markets, you find more things to short than you do to go long, right? Because things always tend to go overpriced rather than underpriced, right? But the reason that he never does it is because you always have to think that, you know, speculations can go however high. And when you are shorting something, naturally you are taking on leverage, right? Because you don't have that asset. Let's say you don't have whatever stock it is, ABC stock, but you want to short sell it. So how do you short sell it? You borrow it from someone else and then you short sell it. So naturally there is leverage because you borrowed something from someone else, right? So obviously the upside is unlimited, right? As you know, with stocks. So anything that has leverage, right? Even if you go long and you put leverage on it, right? Basically what happens is you shorten the time frame, right? Because if you have no leverage on it, basically the time frame is infinite, right? You can wait infinite amount of time, right? Maybe until you die or whatever it is, right? But if you put leverage on it, let's say you put a 2x leverage on it, your time frame is shortened because any time that the stock goes down 50%, basically you get wiped out, right? Unless you have like infinite reserves, which also you might want to deploy another way, right? You won't want to hold those reserves just to ensure that this doesn't go wrong, right? And if you have infinite reserves, you wouldn't be using leverage, right? So a lot has to be said about leverage because this is a very dangerous tool, right? So in fact, Warren Buffett always says that, you know, if you are smart enough, you won't need leverage, and if you are dumb enough, you won't want to be using leverage, right? So number 2 is anything that excites you, right? Warren Buffett has always said that investing is meant to be like watching paint dry, and watching paint dry is not exciting, right? But obviously the final product is obviously rewarding. So if you're buying into something and it's exciting you, basically you're checking on the price every 2 minutes, and I think a lot of crypto people fall into this, right? Because you keep checking the price, right? Naturally, if you're buying an investment, you won't constantly check the price because the price really doesn't matter that much to you, right? Unless fundamentals change. But if fundamentals remain the same, the price will go up, down, sideways. You know, you can't really predict, right? But the fundamental values will continue to increase, right? Let's say I told you that I'll give you this $10. It will keep producing $1 every year, right? Then you won't care whether someone is offering you let's say $9 for it, $8 for it. So when the price goes down, you are not affected, right? But the second part is also checking prices is also important, but maybe you do it once a day instead of every 2 minutes, right? So you can see the stark difference. So why do we check prices even if we are investing, right? So obviously I'm crossing a bit, right? But why do we check prices even if we're investing? So 1 is because we're looking to buy more, and 2, we're looking to see whether anyone will offer us ridiculous prices, right? So if you have a company that earns $10 and someone offers you, let's say, $1,000 for it, right? So that yield is only 1%, right? So obviously I will say, I'll take the $1,000 and I'll find something else that can pay me 10% on it, right? So number 3 thing, characteristic in speculation is obviously things that you can't quantify, right? So if I ask you to compare the price for GME and AMC, a lot of people don't understand like how much the intrinsic value is, right? So obviously at a certain price, it can be an intelligent investment, right? But obviously at the prices they are now, they are not investments, right? They are speculations, right? The price increase is obviously expected from the greater fool theory. And why do I say you cannot quantify it? It's because some things like for example, Bitcoin and Ethereum, right? It's very, very hard to quantify all these things, right? I think 99% of the population will not be able to tell you, give you a range of values, right? How much is this thing supposed to be worth, right? A lot of the projections are just based on this theory or that theory, or, you know, stock to flow model or this kind of things, right? So I'm not saying that it can't be an intelligent investment because Bitcoin has done tremendously well. Intelligent speculation. So Bitcoin has done tremendously well for its earlier holders, right? And I'm also a proponent for this technology, right? I know that it has some sort of value because the value of being able to hold your own money and send your own money across borders, right? There is a value, but what is the dollar amount of that value? This is the question that if you can answer, you'll be a billionaire, right? So the next thing of speculation, the next characteristic is the focus on price, right? So as talked in this speculation definition, obviously they are focused on price movement rather than value movement, right? So the last thing I would say is usually when you are in a very speculative environment, right, you are encouraged by friends and family to basically speculate, right? Because they have heard of that thing, right? And if you heard of something, basically it becomes familiar and you become less scared to take on risk, right? So yeah, I think I dragged this out a bit longer than it needed to be, but I think the thorough explanation was needed. So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, hit the bell button, and with that being said, have a fantastic day ahead and peace out.